Why housing prices keep rising, what you need to know. If you thought housing prices were already sky high, brace yourself because they're set to soar even higher. Despite rising mortgage rates and people having less disposable income to spend on homes, the total value of all houses in the United States has surged by $2 trillion. Yes, you heard that right. $2 trillion. This comes from Redfin, a company that tracks the real estate market. Welcome to the Econo Watch. Why are home prices rising? Let's dive into why this is happening. There are three main factors driving up home prices. Scarcity of homes for sale. Homeowners are reluctant to sell because many of them have mortgages with very low interest rates. If they sell, they'd lose that favorable rate. According to Goldman Sachs, 99% of homeowners have a mortgage rate lower than the current market rate, with 85% enjoying rates well below 5%. Low inventory. In cities like Atlanta, Chicago, Los Angeles, and Washington, D.C., homeowners with mortgage rates below 3.5% are 7.6% less likely to sell their homes compared to those with higher rates. If someone locked in a mortgage at 3% a few years ago, they'd need home prices to drop by 36% to maintain the same monthly payment if they were to buy another home at today's 7% interest rate. New construction. Builders are stepping in to fill the gap. About a third of the homes on the market last spring were new constructions, a significant jump from the historical average of 13%. This surge is driven by the high demand for homes. The role of builders. Builders are in a unique position. They can offer incentives to attract buyers, like lower interest rates, cash back at closing, or even home upgrades. For instance, D.R. Horton, a major home builder, often provides fixed-rate mortgages a full percentage point below the market rate, making homes more affordable. The impact of Warren Buffett. In August 2023, Warren Buffett invested heavily in three major U.S. home builders, D.R. Horton, Lennar, and NVR. Since then, their stocks have soared, with D.R. Horton up by 35%, Lennar by 30%, and NVR by 20%. This investment signals Buffett's confidence in the home building sector, despite current market conditions. So, what does this all mean for you as a potential homebuyer or someone interested in the housing market? Here are some key takeaways. Expect high prices to persist. With low inventory and high demand, prices are likely to stay high. This is especially true in suburban areas, which have seen the most significant price increases as people continue to work from home and seek more affordable living options. Consider new builds. If you're in the market for a home, new constructions might be your best bet. Builders are more likely to offer incentives that can make a purchase more attractive. Evaluate your financing options. Shopping around for the best mortgage rate can save you thousands over the life of your loan. Even in a high-rate environment, some banks or credit unions might offer better deals. Real-life example, the struggle of homeowners. Take the story of Caitlyn Colbert, a single mom in Denver. Her two-bedroom apartment's rent skyrocketed by 400% over the last decade, forcing her to make tough choices between paying rent and affording other necessities for her kids. Despite being a social worker who helps others stay financially afloat, Colbert struggled with notices to pay rent or face eviction, ultimately moving in with family and purchasing a home through Habitat for Humanity. The broader economic impact. The housing market's current state has broader implications for the U.S. economy. High housing costs are not just a burden on younger generations, but older ones too. Many Americans are spending over 30% of their income on housing, leaving less for other essentials like food, healthcare, and savings. Future market predictions. Looking ahead, the market's future is uncertain. While some experts believe that home prices could continue to rise by another 5%, others predict a potential decline if interest rates and economic conditions worsen. However, the general consensus is that any significant drop in home prices is unlikely due to the persistent demand and low supply. Practical advice for buyers. If you're considering buying a home, here are some practical tips. Compare mortgage rates. Even in a high-rate environment, it's crucial to shop around. Buyers who compare rates can save an average of $4,000 over the life of their loan. Be flexible. Don't get too attached to one property. The market is competitive, and being willing to walk away can sometimes give you leverage in negotiations. Consider fixed-rate mortgages. While adjustable-rate mortgages might seem appealing due to their lower initial rates, a fixed-rate mortgage can provide long-term stability. If rates drop in the future, you can always refinance. Plan for the long term. Only buy a home if you plan to stay in it for at least 7 to 10 years. This time frame allows you to ride out any market fluctuations and build equity. We'd love to hear your thoughts on the current housing market. Are you planning to buy a home home soon, or are you waiting for the market to stabilize? Share your experiences and questions in the comments below. Don't forget to like this video, subscribe to our channel, and hit the notification bell to stay updated on the latest economic insights. Visit our community tab for more discussions and updates. Thanks for watching Econo Watch, where we keep an eye on the economy for you.